In the name of Allah, the most beneficent, the most merciful, Honorable Governor, State Bank of Pakistan, respected panelists, Mr. Supnendu Mahanti, Mr. Mamoon Hamid, and Mr. Omar Ismail, esteemed guests from across the globe, ladies and gentlemen, Assalamu alaikum, and a very good evening from this side of the world. On behalf of Pakistan Central Bank, I am immensely delighted to welcome all of you to today's interactive discussion on the promise of digital banks organized by the State Bank of Pakistan. Ladies and gentlemen, as we all know, that the last decade has seen a wave of innovative solutions that promoted financial services beyond the brick and mortar barriers. With the adoption of cutting-edge technologies, the financial services industry deployed cost-saving digital means to reach the masses, especially the financially excluded and underserved segments of the society, with a range of formal financial services suited to their needs. State Bank of Pakistan, being central bank of the country, started the year 2022 with publishing a licensing and regulatory framework for digital banks in Pakistan, with the prime objectives of promoting financial inclusion and customer convenience. The regulatory framework has been designed to attract players with strong value proposition, robust technological infrastructure, sufficient financial strength, technical expertise, and effective risk management culture in the digital bank space. This avenue has an embedded potential for untapping one of the largest consumer markets in the world, with a population size of over 220 million. In line with best international practices and the overall banking situation in Pakistan, State Bank has decided to initially issue up to 5 digital banks licenses, and applications in this regard will be accepted till March 31st, 2022. The goal of today's event is to organize an interactive discussion on the topic of digital banks and the promise they present of advancing regulators' goal of innovation and inclusion in the financial sector. Ladies and gentlemen, I am delighted to welcome a distinguished panel of today's panel discussion. And I'll introduce all of them one by one. And I'll be starting off with Mr. Supnendu Mohanty, who is currently the Chief Fintech Officer at the Monetary Authority of Singapore. He has over 2 decades of public and private sector experience in technology, operations, digital finance, and investment strategies. Mr. Mohanty has also co-authored several patented works in the application of digital technology in finance and won many industry recognitions. Then we have Mr. Mamoon Hamid with us. Mr. Mamoon, who is managing partner at Kleiner Perkins, a Silicon Valley-based venture capital firm that was the first inventor in companies like Amazon, Google, and Genentech. Mr. Mamoon has a BS in Electrical and Computer Engineering from Purdue University, MS from Stanford University, and an MBA from Harvard Business School. Then we have Mr. Mamoon, last but not the least, of course. Mr. Omar Ismail is the incoming CEO of One, which is a fintech startup launched in partnership with Walmart and Ribbit Capital. Previously, Mr. Omar served as head of Goldman Sachs Consumer Business. Mr. Omar has a BA from Dartmouth College and an MBA from Harvard Business School. Our today's panel discussion will be moderated by Ms. Tania Adrous, who is the co-founder of Rain Group, a technology advisory and investment holding company. Previously, Ms. Tania served as advisor to the Prime Minister of Pakistan and has 11 years experience at Google in the US and Singapore. Ms. Tania holds an MBA from the MIT Sloan School of Management and a BSc from Brandeis University. After a couple of round of questions that our moderator will pose to the panelists, we'll be delighted to take questions from the audience. Ladies and gentlemen, I would like to mention with pleasure that because we have over 500 registered attendees for the event, so we request that you please share your questions through the Q&A feature on your screen, and we'll be monitoring those questions and feed them to the moderator. To begin our event, I would request Honorable Governor, State Bank of Pakistan, Dr. Reza Bakr, to please take the floor for his keynote address, which will be followed by the panel discussion. Honorable Governor, sir, over to you, please.
Bismillah ar-Rahman ar-Rahim. Thank you very much, Tahir. And let me begin by welcoming all the attendees to today's event. And let me especially welcome our panelists who have taken the time out of their busy schedules to be with us today. We have with us Mr. Mohanty, who is a regulator from the Monetary Authority of Singapore. I may also call him the Chief Fintech Officer of the entire region for all the incredible work that he has been doing in his leadership at MAS. We have with us Mr. Umar Ismail, who is an entrepreneur, somebody who has created a digital bank himself, is in the midst of creating another one in the US. We have Mr. Mamoon, who is an investor. His firm has invested in many exciting tech companies. And most of all, we have a very dynamic moderator, Ms. Tania Idrus, who is in Pakistan, who left her very senior job at Google in Singapore to come back and work in our country. So I'm very delighted, very excited about the conversation that is going to take place today at this event. I also want to acknowledge right at the beginning my colleagues who have worked very hard for today's event. Our two Deputy Governors, Dr. Inayat Hussain from the banking side, and our Deputy Governor Seema Kamil from the Digital Financial Services and Financial Inclusion side, and our two Executive Directors, Mr. Arshad Bhatti and also Mr. Sohail Jawad. All of them, as well as several other colleagues at the State Bank of Pakistan, have worked very hard to put today's event together. In my opening remarks today, I want to cover 3 points. And my first point is going to be that Pakistan is a country that is ripe for a major digital evolution in its financial system. Second, I will explain that our licensing and regulating framework for digital banks is part of an overall vision for a financial ecosystem in our country. And finally, I would like to share some questions that we as regulators in the State Bank of Pakistan are thinking about as we begin this journey of digital banking in Pakistan. My overall message to all attending today's event is that given the rapid pace with which innovation is taking place in the global financial system, the State Bank of Pakistan sees its role not only as the regulator of our financial system, but also as an enabler to promote our goals of inclusion and innovation such that we bring banking in an easy and affordable manner to all Pakistanis except the illicit. We welcome any and all who want to be part of this journey with us. And that is, in fact, the key reason that we are having today's conversation and today's event. So let me begin with the first point that I wanted to make, which is about the promise of Pakistan as a country ripe for a major digital evolution. And I want to start with a few statistics. Pakistan, as you may know, is the world's 5th largest country, and it's one of the youngest in terms of its demographics. 65% of Pakistan's population is between 15 and 40 years old. 65% is between 15 and 40 years old. This is the prime sweet spot for offering a digital product or service. Second, digital identity provides a foundational pillar of a digital society. In Pakistan, we have 120 million adults that have a biometrically verified national ID. This is 96% of the total population aged above 18. Turning to our banking system, we have 43 licensed banks, 32 commercial banks, as well as 11 microfinance banks. And together, these have more than 17,000 branches in the entire country. We have an estimated 82 million unique bank accounts, including mobile bank accounts. Now, connectivity is the bedrock upon which a digital ecosystem is built. Pakistan has 189 million mobile telecom subscribers, and of these, There are 108 million subscribers that are 3G or 4G subscribers, which means a penetration rate of around 50%. Now, given that some people may have two mobile phones or two SIMs, we have easily somewhere between 50 to 100 million citizens who have a mobile phone but don't yet have a bank account. We have 11 million mobile app users for digital financial services and about 7 million internet banking users for digital financial services. This means that there are at least 70 million who have a bank account but are not yet currently using digital means such as an app or internet for their banking needs. We have 110 million broadband subscribers, which is a penetration of around 50%. Turning to some of the financial statistics about the pace with which e-banking is growing in Pakistan, during the last fiscal year that closed in July of 2021, we had 1.2 billion transactions worth more than 500 billion US dollars that were processed through retail e-banking channels. Now, this figure is more than the GDP of Pakistan. Moreover, these transactions represented a growth of around 30% from the previous financial year, both in terms of value as well as in terms of volume. So if you think of a figure of 500 billion that is growing at more than 30% annually, you can yourself calculate the magnitude that it will rise to in the near future. And finally, we have a thriving startup ecosystem. Pakistani startups raised around $70 million in the fourth quarter of last calendar year. This took the total amount raised by Pakistani startups in 2021 to about 350 million US dollars. This is more than 5 times what was raised in the year 2020. The Pakistani startup funding landscape has reached an exciting inflection point, raising an unprecedented rounds with international venture capital firms. My goal, ladies and gentlemen, in sharing the above figures with you was to illustrate the opportunities that Pakistan represents, both in terms of the size and scope of digital financial services. With that, let me now turn to my second point, which is our vision for the financial ecosystem and how the framework for digital banks fits in this vision. My starting point is an assessment of the strengths and challenges of our banking system as it stands today. On the strength side, we have a stable, well-capitalized banking system with excellent asset quality indicators. It's a system that has not had any systemic banking crisis, the sort that have been witnessed in many other emerging markets. Our banks also demonstrated most recently in the coronavirus pandemic that in times of crises, they worked very well with the central bank to provide a timely liquidity injection and stimulus in our financial system, which marshaled about 5% of GDP in terms of liquidity support and allowed us to prevent insolvencies when some companies were facing liquidity problems. This kind of support working together with the central bank would not have been possible if we had a weak or a vulnerable financial system. Now, while we fully intend to preserve the stability of the banking system, let me turn to the key challenge. And this is the challenge of the unserved and the underserved. The 82 million unique accounts figure that I quoted just a little while ago represents a penetration rate of about 62%. And this is amongst the lowest in the world right now in terms of account ownership. Moreover, there is also a very pronounced and glaring gender gap. For every 3 men who have a bank account, only 1 Pakistani woman has a bank account. Another largely excluded segment is small and medium enterprises. Banks are currently serving the needs of perhaps only 3 out of 100 SMEs in Pakistan. Our financial system historically has also neglected mortgages, although recently, through an initiative led by the Central Bank of Pakistan, we are beginning to see mortgages being provided to those in the lower segments of the society. But other key sectors such as agriculture and several others are ones which are not receiving their due share of lending and other financial services from the banking system. Given this state of play and the problems that we have in terms of our banking system reaching out to the underserved and the unserved, it is no wonder that in surveys conducted by banks, customers in Pakistan, bank customers in Pakistan, often liken a visit to a bank to a visit to a dentist or to a visit to a police station. And no wonder, given this type of survey information that we have available, no wonder people prefer to use cash. Now, given these challenges, our vision of our financial ecosystem is to harness technology to transform our financial system from one which currently caters for the privileged few to one that caters to all except the illicit. And to this effect, we have recently undertaken several initiatives, in addition to the licensing framework for digital banks that I shall turn to shortly. And the underlying theme in all of these initiatives have been to bank the unbanked and the underbanked. Let me start with the process of account opening. In September of last year, the State Bank of Pakistan introduced a framework for banks to open accounts without the need to visit bank branches, using remote biometric verification using digital channels. We are very excited that 3 of our banks are already offering app-based remote biometric verification and therefore app-based digital onboarding of customers. A particular aspect of this, we believe, will promote women's financial inclusion, allowing women to be able to open a bank account without leaving the comfort of their house or their office. And an exciting initiative in this regard will be launched by the State Bank of Pakistan on International Women's Day. Another initiative that we undertook is an initiative called an Asan. Asan is the Urdu word for easy. Asan mobile account. These accounts can be opened by anyone using a low-cost feature phone by dialing *2262# from their phone. The point of sharing these examples is to share with you some of the initiatives that we have undertaken to help address the first key problem in the journey, which is to make it easy for a customer to open a bank account. Another major thrust of our work has been to provide the correct and a modern infrastructure for payments. In November of 2019, the president of the World Bank, David Malpass, visited the State Bank of Pakistan, and he and I together launched Pakistan's National Payments Strategy, a vision document that is available on our website. A key element of this strategy is moving Pakistan away from cash by offering cheaper and easier digital alternatives to make payments. One key part of this strategy was offering an instant payment system. And 2 weeks ago, Prime Minister Imran Khan of Pakistan marked a milestone in the State Bank's digital payments journey by launching Rast, person to person, the name of our instant payment system. Rast is fast, it's free, and it's secure, and it places us alongside some of the world's most advanced payment systems. The rollout of Rast person to person is underway right now, and the next stage that we hope to complete this year is the request to pay feature, the P2C stage of our faster payment system, which we hope will bring a major push forward in e-commerce in Pakistan. Another key area, now turning to the ecosystem, is open banking. And the State Bank of Pakistan has been engaged in a conversation with stakeholders, banks as well as non-banks. And this conversation is the clearest example of our goal to put the customer first. Under the proposed framework, if the customer agrees, its bank would be able to share the customer's permissioned data with other banks or fintechs, so they can build and offer better customer-centric products. Another state bank initiative, which is in the midst of being taken forward with the Pakistani Banks Association, is a common Know Your Customer framework, where an existing bank account holder would not need to provide account opening forms over and over again if she wishes to switch to another bank to seek better customer service. Our goal with these initiatives is to make banks compete for customers' business rather than the other way around. Lastly, in terms of the initiatives that I want to mention, is our study of central bank digital currencies, something that we are studying and engage in a conversation with other central banks. Our faster payment system that we are rolling out, we believe, puts us in a position where we can seriously consider the pros and cons of central bank digital currencies and its appropriate design features for Pakistan. So my goal with sharing all of the above initiatives was that the framework for digital banks that we have introduced in January of this year is part of an ecosystem that we are hoping to create in Pakistan. And with that, let me turn to my final point, which is about this framework for digital banks, what we are hoping to get out of it, and what are some of the questions that we are thinking of right now as we look at giving licenses. Now, our goal, as is the goal of many regulators that we have studied in emerging markets, is inclusion and innovation, amongst other goals. These new banks that we hope will start up services soon are banks that will primarily operate through digital channels, and we hope will allow customers easier access to financial services such as saving, borrowing, and payments products, and will do so at competitive rates and with competitive customer service. Our goal is to give control of financial needs back to the customer with this framework. In our licensing framework, we have a special category for a digital retail bank, which is a bank that will cater only to SMEs and retail customers. This will address a key problem that we face currently, which is access to credit in the country. The sole focus on retail and SMEs would also mean that digital retail banks will have to make it easier for customers to apply for loans and access personalized banking services. So as we embark on this journey, what are some of the questions that we as regulators are thinking about, and which I hope the panelists may be able to shed some light on in the panel discussion? First, when we look around in the region at the experience of other countries and other regulators that have issued licenses for digital banks, how have other regulators measured their success? And what can we learn from their experience? Another key question that we are thinking about is how to ensure a level playing field between the incumbent banks and the newcomers. And in this goal of a level playing field, how much should the regulator get involved? Third, what can we do as regulators at the license giving stage to ensure that a licensee indeed delivers on the promises and timelines that they commit to when submitting their application? And fourth, what is the appropriate background for management and boards of digital banks to make them a success? Should they be techies? Should they be bankers? Should they be some combination? So my goal with sharing some of these questions with all of you was to shed light on the thinking that we are doing as regulators, and to look forward to the conversation that will ensue in the panel discussion, where I hope that the panelists and the moderator will be able to shed light on some of these questions. I want to end my remarks where I started, by thanking everybody who has joined us in the conversation today, by thanking our esteemed panelists, and to convey that as Pakistan's regulator of our financial system, we see our role very much not only as a regulator, but also as an enabler of a digital financial ecosystem in Pakistan, which helps to bring banking and financial services to all but the illicit. Thank you. And over to you, Tanya.
Thank you so much, Governor Saab, and pleasure to be here. Thank you also to the State Bank for hosting this event, and very excited to be welcoming all the panelists from all over the world, actually. I know it's very early for Umar and very late for Supnendu, and Mamoon actually happens to be in Pakistan right now. But this should be a very exciting discussion. So please, the audience should get ready to start submitting questions in a little while. Supnendu, I'd like to start off with you. As a regulator, Singapore is not only highly banked, it's also pretty consistently ranked as having some of the best digital payments infrastructure, really globally. So talk us a little bit through why the Monetary Authority of Singapore went down the route of introducing digital banking licenses a few years ago, and how you've seen that evolve and how it's helped sort of financial services and the ecosystem in the country.
Thank you, Tanya, for having me, and thanks. I want to thank the central bank to have me in this discussion. And I was hearing Governor's speech. I almost felt that if I look back from today, 5 years back, the journey we took is almost identical to his speech, the way he went from point one to the subsequent point. But the question which really struck to me is the last question he asked: what should be our approach, and how do we prepare our incumbent bank to get ready? In fact, 2015, when I took this job, that was the first policy question I had to address. Before issuing digital bank license, let me get my incumbent bank ready for it. And that is the genesis of Singapore's journey in this space. So your question that while Singapore is highly banked, it's still dominated by incumbent bank. And what should be our policy stance to get them ready for the starting point? Now, if I go back and look at my first policy statement or my first policy document, is interesting. Is not a policy statement around how to improve payment systems or how to have a different lending practices. Was strangely an API guidelines for the banks. It was a very unusual policy starting point because the intent behind that was, are bank systems ready for partnering with the new age technology? And the foundation to that is getting the bank's own architecture ready to collaborate. Well, I had no logic to start that, but I think that was a starting point. And when you look back, it makes a lot of sense. But we never thought that way when we started thinking about. And the reason I'm bringing it because I'm answering Governor's question, how to make incumbent ready for this competition. The second point is we didn't rush to do the digital bank earlier when we started thinking the fintech strategy. It's the same way what Governor's articulating, get your rails ready. Because if you don't get your rails ready, no point in putting a digital bank license framework. And the rails are in three shapes. One is, can I start onboarding these customers digitally? And what are the foundational infrastructure we provide as a state for these banks to start the journey digitally from day one? So get your national KYC facilities ready so that we build a eKYC facility on top of our national identity network. That was the first one. Second, can this bank's payment system talk to each other? So we built a interoperable payment network on top of our faster payment system called PayNow, so that every bank can talk to each other by just the mobile phone number and move money efficiently. Third example would be that, and it's interesting that this is an unusual policy statement stance we took. After two to 3 years of working with the ecosystem, with the bank, we realized still things are not moving. And we took a strange policy barrier we had in the ecosystem called tech outsourcing guidelines, which banks have to follow to work with a startup. And if you open that book or that guidelines for every bank, the first page itself makes it difficult for them to work with a startup, because I'm pretty sure that is true in central bank in Pakistan, that they must work with a credible organization, and a startup with 2 to 3 years of history will never pass that gate. So how to enable a bank from a regulatory stance to work with an outsourced partner who is perhaps 2-year-old, perhaps 5-year-old, and what are the risks they carry by bringing them to that ecosystem to digitize faster? So we looked at those policies and also see how do we facilitate this process of getting smart startups into the banking system through a process of an experimentation path. And that led to the establishment of what we call as a regulatory sandbox. So that becomes a safe point where an incumbent bank comes and work with a startup with regulatory oversight, and we ensure that the risk is managed in a thoughtful way before they get into a banking system. It's strange that today we are talking about digital bank, I'm talking about incumbent, but I'll come to that big question at the end of my intervention. Then the fourth point is, do we have enough startups around this banking system here who can truly transform every piece of solutions we want to change? We got to put a lot of effort to build that ecosystem. We have to put a lot of money behind encouraging startups to find their route in Singapore. We have to go broaden our scope, because traditionally, if you ask what is fintech, they think about payment or lending. But the real definition of fintech is actually everything. Any bank, any technology which can dramatically transform a banking process is a fintech for us. Whether it is a capital market or trade finance or a back office automation which makes the customer journey efficient is a fintech for us. So how do we expand that definition and ensure that every business process has got enough startup to respond to that transformation need? So build that ecosystem. Then we looked at, do we have enough people who can actually support this transformation? Whether you look at incumbent or the new digital bank, they have to draw in new talent. We went to every possible curriculum, introduced changes to that curriculum in terms from diploma colleges to engineering colleges to training providers who then provided a wide range of possibility for people to upskill themselves. Because that's the key, because you can have great digital bank, but if you don't have talent to support these banks, then they will go nowhere. And the last point is that how to build your own national unicorn. And this is my biggest argument for a success, because normally people think that if you have to start a digital bank, we need to have a fantastic global bank coming and implementing a great digital system. Answer is no. You need to have a company or a startup who is domestic focused. You look around all the global success on fintech, almost 90% have started their success from the domestic market where they started their journey. So data shows that the biggest success point comes when you solve your domestic problem. So get those fintech who can come to Pakistan or build out of Pakistan's own ecosystem and solve your domestic need first. Because once you build that transformation, then going overseas becomes far more successful path than starting from the other side. And the last piece, which I thought was our precursor before issuing this digital bank license framework, was what are the platforms available for us to start connecting to ecosystem players outside Singapore. We built something called API Exchange Platform. We built something called Pratior, which brings small businesses together. We have built a lot of this global or multi-jurisdiction platforms, which allows a lot of our banking institutions and fintechs to start collaborating with markets outside. And that's came almost quite later stage of our process. So how to build those platforms, which allows you to connect to different market participants beyond your jurisdiction. To the end comes the big regulation changes, because once you have this enablers in place, you start putting your regulations in place. In fact, our payment regulation went 2 years back. All our subsequent regulation on lending, on cybersecurity, on capital market were all upgraded just a year before we decided to issue our digital bank licenses. So we got our policies, that's the end part of the journey. And then we went ahead and issued these digital bank licenses, and they're still in the process of getting their operation in Singapore. But the big message, Tanya, here is that get your foundation ready, get your talent pool ready, get your startups ready, focus on domestic market, then you can see the real success from this shift you're making.
Thank you, Supnendu, and really fascinating comments. And what really struck out to me as you were speaking was that so many of the building blocks you've mentioned are actually already in place in Pakistan. You talked about KYC, digital identity. We've had a very well functioning digital identity system. With RAST coming into play and opening up, and ultimately all banks being mandated to come on, that sort of interoperability problem and that building block starts to come into play. Thriving startup ecosystem, as the governor was mentioning, and lots of talent. I think the beauty of the timing is that all of these things, as you were mentioning, are really coming together. So Prendo, I'll come back to you in a little bit, but I'd love to turn over to Omar.
Tanya, just on 30 seconds on talent. And one thing we also
Sure.
realize, I hope Pakistan doesn't repeat that mistake. Your talent cannot be done only by looking inside. You've got to inject overseas talent back into the system. I think that has worked well for us. I'm sure that will work for Pakistan also. Think about bringing talent from outside to get into the local system.
We are all trying every day. Umar, I'd love to turn over to you. And you spent many years building Marcus at Goldman, and are now creating another new exciting fintech with Walmart. Talk us through some of the key insights just from having built a very successful digital consumer bank in the US, and how you see that sort of play out, both there, but also lessons that we can draw from it here in Pakistan.
Sure. Hey, Tanya, thanks for having me. Thank you to the State Bank for having me. Couple of insights I would give just on the basis of my experience here in the US, and just seeing kind of what worked in the Marcus context, but also a lot of other neobanks and fintechs around the US. The first thing I'd say is that, we're still, despite all the innovation that's happened in the US, you read about it, you see it, I believe we're still in the first innings of this playing out in the US. It's March 3rd today. If you went to a Walmart on the 1st of the month, there are 1,500 money centers across the US, Walmart money centers across the US. If you went to any of them on the 1st, you would see long lines at Walmart money centers with people standing trying to cash their paychecks. 1 in 4 Americans are today still unbanked or underbanked. Growing up in Pakistan, and I say this, with a lot of humility, growing up in Pakistan, you think everyone in America is wealthy. And, now having spent almost 2 decades living here, if you look at the statistics in the US, half the US cannot afford a $400 emergency, either has to borrow or sell something in order to be able to fund a $400 emergency for their family. And so the truth is that despite all the innovation that's happened in the US, I believe we're still in the first innings of how neobanks in the US are going to continue to innovate and solve real customer pain points. If you look at one of a very successful example here in the US called Chime, that has over 10 million customers, publicly rumored to go public at a $40+ billion valuation, they came up with a very simple solution. Let's get people paid 2 days early. And we're able to, really get a lot of market adoption because they were solving a real customer pain point. So that's kind of the first thing. The second thing I'd say, just, from my experience, both at Goldman, but seeing lots of other examples in the US is, if you think about banking here in the US over the last 20, 30, 40 years, it was about consumers having to go to banks. And what is fundamentally changed now and will continue to change, and Supendu talked a little bit about this as well, is this idea of embedded finance. Let's finance and fintech and banking meeting consumers where they already are. If you think about actually one of the largest mobile wallets in the US, it's the Starbucks app. The idea that 30 million people use the Starbucks app to pay for Starbucks every time they go there. And the reason they do that is because it is the best example of, meeting consumers where they are and being able to, load your wallet and use it for something that you use every single day. And so while I was at Goldman, we worked on a very successful business with Apple and the launch of Apple Card. But there are lots of examples. If you think about Shopify and a lot of other things that are happening both on the small business side as well as the consumer side, is the idea of not having people come to banks, but meeting consumers in their financial needs and their banking needs where they already are, where they shop, where they work. And again, Starbucks being a good example. The third is, a little bit of what Supendu mentioned, which is, at some level, everything is fintech. It used to be, 10 years ago, people didn't even know what the category of fintech meant. And now, you just see that the lines between, technology and financial services, but you could look at all kinds of other industries, whether it's healthcare, whether it's gaming, it's all kind of merging, and you're going to continue to see this. And so if you think about the largest, tech players in the world, Tanya, you have experience with Google, outside the US, but you could look at, Google, you could look at Amazon, you could look at Apple. Everybody is the lines between technology and financial services are really, and in some ways, everything is headed in that direction. And then the final thing that I just say is that one of the things that's happened in the US, and in many ways, I think Asia is ahead of the US, and I think we will continue to see this playing out in the US, is that if you think about the innovation that's happened in the US in fintech, it's still been a lot of point-to-point solutions. It's been very product-driven. Robinhood is a very successful investing app in the US, and that's how they started. And now they're obviously expanding into other lines and other verticals, but that's what they did. If you think about Coinbase, it was all around, buying and trading crypto. If you think about Chime, as I mentioned, it was all about your digital neobank and getting paid early. But it's, the average consumer here in the US, even the average fintech consumer has, 10, 12, 15, 20 different apps to manage their financial lives. And one of the things that you will see happen in the US, and again, I think we're in the early stages of this happening, is the true creation of a super app. The idea that there's going to be a rebundling of financial services where you can come to one app to be able to manage your financial life holistically. That's obviously happened more successfully in Asia, but there are, 3, 4, 5 players in the US that are, trying to do this. Cash App, which is owned by Square, has been very public about its ambitions to do that. PayPal has been around for a little bit longer, is trying to do that. And again, in the context of my new startup, we've talked about the ability to do that. So I think one of the things that you'll see in the US, and I think playing out in other parts of the world, is the rebundling of financial services, as opposed to, a consumer having 15, 20 different apps to manage their financial lives.
Thank you, Umar. And, again, I love what you said around, meeting the consumer where they are. And I think that that's something that, particularly as you think of the evolution here in Pakistan, and, particularly as you start to look at the really underserved segments, women as an example, as we think about a more digitally enabled financial services system, the ability to do that far more easily for consumers, actually presents a really interesting value proposition as we look ahead. So Mamoon, moving on to you, you've been investing globally for a long time, and of course you've invested heavily in the US, but you've also invested in countries like Turkey and Indonesia. And tell us a bit more about what's attracted you to fintech businesses as an investor, and how have you seen them evolve, during the time you've been investing actively?
Yeah, first of all, thank you, Tanya, for hosting, and thank you also for to the State Bank and Governor Saab for inviting me here. Yeah, so fintech as a category is really, I'd say been around for the last decade or so, and the first 5 years or so has been around the building blocks required to build, ultimately digital banks and of the like, so consumer services that actual consumers can use. But the first half of the decade, at least from our vantage point, was really around the building blocks. And Kleiner Perkins, the firm that I work for, we were investors in companies like Stripe and in Square and in Plaid and other infrastructure companies, really, that enable financial services. And as technologists, one of the things that we love is how technology truly democratizes access. And it democratizes access because inherently technology is supposed to make things more efficient, reduce the friction between the people changing money changing hands between people, or whether it's payments, whether it's money being lent to them, and just in general, it's supposed to bring lots of benefits. And we're finally starting to see that happen, not just for the folks who've had banking and access to banking for lots of decades, to also to those people who didn't have even whether it's bank accounts or just access to a little bit of credit, or like Omar was saying a few minutes ago, having access to their paycheck 2 days earlier. And as we know, these things really do matter. It allows the creation of a more robust middle class, where a little bit of money can allow you to invest a bit more in yourself, in your family, into your business. And I think really that is where we are now, and where hopefully for a country like Pakistan, a lot more people have access to banking services that a lot of us, in the West have had access to for many decades. But really, if you think about what the excitement has been, the first phase being the plumbing, and now it's the services. And I think next is like even more specific services for specific types of end customers. For example, in Pakistan, women who may not have that access to any kind of bank account in the past, but again, technology with all its enabling ways gives them access to a simple thing as a bank account with a little bit of credit. So I'll just pause right there, though. Tanya, are we stuck there? I think Tanya might be stuck.
I think Tanya is stuck, so let me try to step in her role as a moderator and wait until Tanya comes back. And I want to maybe come back to Supnendu then and come and ask you a question. Supnendu, we looked at a few jurisdictions, and Malaysia, for instance, is one where when it gave digital bank licensees had specific KPIs where it monitored whether the licensee was living up to the promises they made on improving financial inclusion. So tell us a little bit about if you have any suggestions for how we should try to measure whether a licensee indeed lives up to the plans that they submit for promoting inclusion.
Thanks, Governor, asking the question. And I would like to answer in two parts this question. One is, most of the ASEAN banks, including Malaysia, before they decided to issue digital bank licenses, they somehow managed to get the incumbent bank to adopt some of this new way of doing banking. So the pressure on the cost pressure on the banks to deliver an affordable solution has dramatically reduced, because new technology, new processes does make easier for this bank to lend to the same segment who previously they did not lend to. And your digital banks who are going to come in Pakistan, you expect them to serve that segment which has been unbanked for many years. And for them to deliver that KPI, they need to dramatically come to the space with a cheaper cost of technology, with a more efficient operating procedure, better risk management, and still complying to your controls and your regulatory obligations. And the true test comes when you get the three variable validated, that they're delivering at a cost point far more attractive than what the incumbent are doing. Second, they've truly expanded the credit market. And third, they're not taking new risks in this process, or they're not opening up new risk in the process of opening the credit lines. So that will be the test of this new digital bank. And you expect them to deliver to that promise, because in your framework, you have allowed them to not have a branch. So that they're supposed to be fully digital. They're supposed to take advantage of all the underlying networks you have built in Pakistan, whether it is eKYC or national ID or your improved credit bureau system. These are all expenses you have already taken in your state as building the infrastructure. In a way, you have subsidized that cost structure and their starting point as against incumbent bank is far more cheaper. So their cost of onboarding will get cheaper than the incumbent. So hence they should deliver to that promise. So that's where my views on that particular question on how do you get the KPIs measured and calibrated as you move along. The second part of that there's a second part of the question which I think other day DG Sima Kamil asked, which is very profound question. Why do I need a bank account? And this is a question you have to answer for the people who still don't have a bank account. And part of that answer is what Omar was talking, is that finance is not the first thought, finance is the second thought. And here I'm going to put central bank in a bit of a spot, is that you have a policy responsibility to get there. And the policy responsibility here is that, will you allow your digital bank to start commingling the line of businesses, which means to deliver to Omar's promise that when I go into a marketplace which is not finance, let's say healthcare, can the finance embed in that system? And to do that, there are two ways to get there. One is, can the bank take an equity in that infrastructure? So, which means they can plumb themselves within that infrastructure to be right there at the point of when I decide to have finance, the finance is sitting just as a second question, a second step. So there's a policy challenge there, how to bring sectors merged into the financial sector when it comes to consumer offering. If you get that right, I think we answered that profound question with the DG Sima Kamil asked, why do I need a bank account?
Excellent. Thank you. Tanya, I stepped in for you. So
Thank you.
please take over.
This is sometimes when technology fails you and your computer crashes while you're moderating a session.
I
So
think Governor Sir is so engaged. Yes, so engaged. I think he can be a good moderator as a standby for all of us.
Thank you. No, that's deeply appreciated. And so, Prendu, thank you. I caught the second half of your answer. So, Omar, I'll come back to you. And this is slightly more Pakistan focus. I realize you've been away for 2 decades, but of course, raised in Pakistan. And as you think of this sort of new, as you think of the next decade with these sort of new regulations coming out, and hopefully some new players coming in, and um, and really evolving the ecosystem. What do you think some of the core execution challenges will be for digital banks, and particularly as you think about building successful teams? And this is a question that the governor had posed as well. In your experience, what did it take to build a really successful team, to build an amazing digital bank that can really go after some of these challenges that we're talking about?
Sure, Tanya. Happy to shed some light. The first thing I'd say is that every digital bank in the world, in the US, ones in Pakistan, elsewhere, are going to go through a very interesting decision framework and a journey as to, in order to deliver that service to consumers and all of the capabilities that you need in order to deliver it, how to think about buy versus build. If I think about, the digital bank that we launched at Goldman, we had to, stitch together with APIs, over 100 different SaaS providers and vendors in order to deliver that service. Some obviously we chose to, build in-house. By the way, we started that journey in 2014, 2015. And, as Mamoon was talking about, some of the companies that, Kleiner invested in, like Plaid and others, and, has continued to invest in, that SaaS provider framework has dramatically changed in the last 7 years. The ability to launch a digital bank today, we wouldn't make the same decisions that we made 7 years ago just because some of these providers didn't exist. And so the decisions that digital banks in Pakistan will make today in terms of what to buy, what to build, where to stitch together, those are going to be really interesting conversations that will need to happen. There's no right or wrong answer. And I can assure you that whatever decisions, whatever digital bank makes today, 3, 4, 5 years from now, that decision will look different because, the availability of providers and data will be different. The second thing I just say is that, there are two heavily regulated industries, financial services and healthcare. Generally speaking, there are other regulated industries too, but financial services and healthcare, you're dealing with people's health, you're dealing with people's money for appropriate reasons. These are, are regulated industries. I think finding the right balance between people who understand that this is a regulated industry, and you're dealing with people's money, and you can deny people access to credit on the basis of their race or gender here in the US. I can give you lots and lots of other examples of just making sure that you are working within the regulatory framework. But equally, you need to find people that are thinking about how to fundamentally change and disrupt. And I think finding that right balance between, you don't want to go to people that just understand the regulation, because then you're just going to recreate the banks of the past. Equally, you don't want to go to people that just want to disrupt, because then they may not even recognize the fact that they work in a regulated industry. I think finding that appropriate balance between, people who understand the regulated nature of financial services, but yet want to do things differently is hard. And again, it's, in certain positions, as I think about the Marcus team that I was involved with, or the team that I'm building right now, like our head of credit risk is going to come from somebody who's done credit for a very long period of time. But when you think about your CTO or your chief product officer, there are lots of other positions where you can try to find people that aren't encumbered by having just worked in a bank for the last 20, 30 years, because then you run the risk of just recreating the past. And then the final thing, I was inspired a little bit by what Mamoon said, which is, there is an approach to innovation, which is around taking technology to do some marginal improvements around processes. And then there's an approach to technology that says, we are going to take technology to eat labor, right? We are going to figure out how anything that a human being does, can be done by technology. One of the things that I always used to say to my head of operations in my past life is, your job is to eliminate your job, right? And we'll never get there, because you're always going to have some kind of a call center and human support. But how, making that the North Star of, let's get to a world where a consumer never has to call a human being and can do everything on their phone. And so I think that those are going to be some interesting challenges and debates. The good news, honestly, for Pakistan is that, you're going to get to leapfrog a lot of, starting in, 2022, as opposed to starting in 2010 or 2015. And so I think it's going to be really exciting and fascinating to watch the digital banking journey that's going to unfold in Pakistan.
No, indeed, and I think what we've seen with the startup ecosystem, really evolving and thriving is all just really positive signs as we get into this space. And Mamoon, I'll turn over to you for at least the last question from my side, and just a quick note to the audience. This is a good time to start lining your questions up so that we can use the last 20-30 minutes to take your questions to the panelists. So Mamoon, you led Kleiner's first investment into Pakistan last year, which was just a massive endorsement for the local startup ecosystem. And so clearly you're bullish about the market. And I think what we're all very curious to know is what in your eyes makes Pakistan an attractive investment destination. And we have a number of global investors on the call today, and I think it would be just really valuable for those that are waiting to do their first investments into startups in Pakistan. If you have any key messages for those investors.
Yeah, I think Reza really nicely articulated the high level numbers that make Pakistan so attractive as a country for investment, for technology startup investments. The 220 million people, 100 million plus that are internet connected, and a rapidly expanding middle class, a young population that is bypassed, desktop computers straight to mobile and mobile workflows. And so all of those are the raw ingredients that make consumption, whether it's consumerism, whether it's adoption of products that are software based, like a digital bank on your phone, makes them all easy to adopt and actually more compelling ways to use analog services now in the digital realm. And I think there's just a whole host of products and services that were consumed in an analog way that will become tech enabled and digitized. And so that the demographic and the fact that a lot of these services don't exist today, or they are being built as we speak today, makes this really exciting. And I will say, I haven't been to Pakistan in many years. In fact, 15 years, and I'm on the ground here now. The energy felt sort of palpable before I even got here, and here now that I'm here on the ground, it's even more so. You see, I've had a chance to meet lots of founders in person now in real flesh, and you hear about what's being built. But I've met dozens of founders building products and services and companies in Pakistan before this, so over virtually, and still you could tell, like, what's being built really is compelling, and the timing is just right. It's right for an early stage investor like me, because we invest seed, Series A, and it takes a year or two to build something, and then for it to come to market, and meaning that in the next couple of years you'll see all kinds of goods and services, products that are tech enabled come to the common person in Pakistan, that are started by that are companies started by by founders of tech startups, and so and that are backed by venture capitalists like ourselves. And so the energy is there, and I think it actually, and that matters because energy means there's an ecosystem that's developing. There's a talent pool that's encouraging each other to go start companies, to join startups, and instead of going to work for a multinational, go work for a hot startup. And with a few successes, there'll be a virtuous cycle that develops, which is that the early employees of successful startups will go start their own startups. And so it is the beautiful virtuous cycle that we live in, have lived in in Silicon Valley for the last 60 plus years. And I think there's no reason why that can't start to sort of flourish and blossom in Pakistan.
No, thank you. And we often say as part of the startup ecosystem that the next $5 billion plus companies are likely going to be technology companies, and they're going to get created far faster than the previous few billion-dollar companies that exist in Pakistan. So I'd like to turn over to some questions from the audience. And Supnendu, I have a question for you from the audience, and I'm just going to read that out. So, the person's asking, so far the experience of digital banks has been that they're mostly involved in concentrated lending to consumer and or cards. What measures should central banks adopt in the medium to long term to divert this lending to more productive segments like SMEs or agri? And what are MAS's experiences in this regard?
Well, I read that question. It's a very good question. I am very happy that question came about, because for a place, and I have seen in the market here, in the region here, I think largely many market are dependent on the agriculture sector. That's almost a big part of the economy. And it is important for a digital bank to focus on small and medium sector, because they're the bread and butter of any country's GDP growth, because 80% of employment small medium enterprise provides. I think it's important that the digital bank, especially who got license for commercial and business lending, they should demonstrate clear sectorial focus on solving some of the challenges on the sectors like agriculture, which is subject to a lot of risk in terms of lending, so they don't get access to lending. How to build comprehensive insurance model, pension structures for that economy. I think having a comprehensive policy stance from lending to insurance for the small and medium sector, also some incentives to facilitate services to that segment would be key to the success of digital bank. I do agree that most of the digital bank generally speaking, should have a strong expertise in doing individual lending or solving the payment problem of individuals. Most of the digital banks do suffer from their inability to serve the small and medium segment. So there is a need for a certain policy support, both from a state in terms of building platforms. And I'll give an example so that it's easy to understand. And this is a real example. I was speaking to a country in Africa where when I spoke to this small and medium enterprise, they were saying that they cannot get access to finance for exporting to Asia. And we went through that process despite talking to the banks. Nobody moved an inch because the risks were too high to lend to the segment. What did we do? Both and this particular country and Singapore came together, built something called Financial Trust Corridor. It's a very simple process. We got all the exporters to list in that platform as whitelisted companies in Africa for that country. We are working with the development bank in that country to guarantee for the lending given to this entities, and we are putting a platform together where both the buyers and sellers can match themselves electronically and have a cheaper way to exchange their services and good. So what I'm trying to demonstrate here is not only the role of a bank or a central bank, you also need to pull in other regulators, other policymakers to come together to solve that particular question on the agriculture sector. So that's a way to go about solving that issue. Yeah, so that's my response to that question. So it is a much bigger problem and much bigger challenge than a simple lending and a payment fintech trying to solve a very small, narrow requirement.
Thank you, Supnendu. And this next question I'd love to get both Umar and Mamoon's perspective on. This is a big debate in the ecosystem right now, and someone's asked this question, which is around what types of players do you think should actually get these digital banking licenses? What have you seen in other markets? In the case of Mamoon, as you've invested in players across the world, just sort of any thoughts around that?
Yeah, I'll defer to Omar since he's building one of these and built one prior to this one too.
Well, first of all, I'm going to leave it up to the State Bank of Pakistan to figure out who to give digital bank licenses to. I would be way overstepping. What I would say is, in here, at least in the U.S., and just based on my experience, there are kind of two kinds of players. When I was at Goldman, we started a digital bank, but we were also a licensed bank ourselves. Goldman itself had a banking license. And so we didn't have a consumer banking business the way you would think of having. And so we were unencumbered from a technology product standpoint. And so could create it from a clean sheet of paper. Did not obviously have any physical branches, but as a bank license entity, we had the ability to use Goldman's bank license, which Goldman had gotten coming right out of the financial crisis. The other alternative in the US is that when you think of some of the more successful neobanks or digital banks here in the US, I gave the example of Chime and others. The one that I'm working on right now in terms of starting, we don't actually plan to be a bank license entity ourselves. There is a very robust banking as a service infrastructure here in the US where you can offer bank type services, but you yourself are not the bank. There's a bank that sits behind it, and they are the licensed entity. They are the regulated entity. And ultimately the contract, if someone is getting a loan or opening a deposit account, that actual contract exists between the official bank license entity and the consumer. And the digital bank that sits in between is more providing the product, the UX, is providing the marketing, providing services, but ultimately it's not the bank. So there are these two alternative models where you can start a digital bank as an actual bank license entity, or you can be a neobank where you're not actually the bank, there's a bank that sits behind it. And just, and both models have worked successfully here in the US.
Tanya, I know that that's not a question, but I thought I'll do a great disservice to this discussion if I don't repeat this. All the discussion we're having can be a catastrophic failure if we don't solve for three elephant in the room. First is that, and this is where central bank has to lean in heavily, is to work with the banks and find a way to solve this outsourcing guidelines. I tell you, it's a boring document, but that will come as a big derailer to all the startups who are trying to plug the solutions to the banks. I strongly urge the central bank to work with the banks to solve that problem, allow these banks, whether digital bank or incumbent bank, to able to work with startups, irrespective of the size they have, small, big, good, new, strong pedigree, no problem. Find a way to make it work. The second elephant room is the people. I would strongly urge at the onset of the starting of digital bank journey, the Pakistan ecosystem should bring three kind of people together to have an honest dialogue. The risk officer, the CIO, the cybersecurity officers, and the supervisors. They must sit together, have a series of discussion, come to an agreement that how we are going to collectively support this change. Because there is certain risk, new risk you're going to adopt as you go to a full digital bank. And you cannot use incumbent thinking and practices to make that switch. An honest dialogue is required, and that requires a lot of confidence building with central banks being the owner of that dialogue. And the third, access to capital. And I don't mean access to capital from the venture capitalist or the investor. How small the amount is, a small pot of money from central bank is a great money for signaling. If central bank can find a small pot of money, and just even it's a $100,000 or $50,000, they use that money to fund pilots and proof of concept. It's a strong signal from the central bank that they have a skin in the game in this shift. So having that little small pot of money as a signaling money to fund some of these new ideas or adoption of new services, new technology will go a long way making this ecosystem strong and vibrant. Because once central banks give that signaling money, the VCs will come in big numbers. I'm sure Mamoon will bring big dollars back to Pakistan and scale these things.
Thank you, Supnendu. Mamoon, any comments before I move to the next question?
I think we have a lot of questions, so I'm happy to let you go through
Okay.
the rest.
So, Governor Saab, I actually have a question for you from the audience, and I hope that's okay. The question is, what is your thinking around the board management mix for these digital banks? Secondly, speaking of digital, are there any plans for a central bank-backed digital currency?
Let me take the second one first, and then I'll come to the first one. I briefly alluded to our work on CBDCs. It is something that is at its early stages, and for two reasons. The first is a very practical reason. We have, as any institution, limited resources, including human resources, and we are primarily focused on setting up the payments rails. And as Supnendu also mentioned, we have to make sure all the enablers are there. So the rollout of RAST person to person, and then the RAST P2C, i.e. the request to pay features, are very high priorities on our agenda right now. But the second is that we are also actively looking at the experience of other jurisdictions and engaging in conversations with central banks to understand how they are looking at this journey. We are in a slightly, I would say, interesting position where some central banks are looking at CBDCs where they don't have faster payment systems. We do. And so the question to us is the incremental gain that we get. In one jurisdiction, a regulator said that a CBDC is a is a solution looking for a problem, because they already are very well banked and they already have a faster payment system. We do believe, where we sit right now, that even for a system with a faster payment system, a CBDC does bring significant incremental goals, incremental benefits in terms of the goals of inclusion and innovation. It all comes down to the design. Are these going to be token based? Are these going to be account based? Is the central bank going to have a retail facing function? Is it not going to have such a function? So these are the questions that we are looking at, and looking very closely at the journeys that have begun, and looking forward also amongst other central banks to have this conversation with the Monetary Authority of Singapore as well, as MAS is quite further along in this thinking. Your earlier question from the audience was, I believe, about what sort of backgrounds we are looking for in terms of the management and the boards. And I hate to be boring, but I will say that we are looking for some of both. We are looking for core financial expertise, especially in areas such as risk and credit. But we are also looking at demonstrated ability to harness technology in advancing the financial offering. In this context, any applicants that have as part of their proposal stakeholders, players that have been involved in other jurisdictions increases our confidence in the proposition being offered by that applicant. We also have to be careful, and this is something that we have discussed internally, to not pre-program our evaluation of lives of applicants too much, because we also have to see how the whole package comes together. And theoretically developing too many criteria is also not often the best way when we live in a very practical and real world where things come together in a package. So definitely some combination of a technology background, but also some core financial strengths that are critically needed, because at the end of the day, a bank is taking deposits from the public, and we as regulators have to ensure that it has the teams that have those core financial strengths to be able to do justice with the trust of the people when they put their money in the bank.
No, thank you for that, Governor Saab. And I think your comments around the rails and countries who have these types of rails and countries who don't, and sort of how they're approaching the future, really are I think really resonate and are spot on, because the presence of the rails and the interoperability that they provide are really can be quite game changing for an economy. This is, my next question. Really, I'd love to get everyone's perspective, all of the panelists' perspective on it. And here, the person from the audience is asking around particularly markets that you may have seen that are similar to Pakistan. So, think Philippines that has just gone through a digital, they've just given out digital banking licenses. Or Indonesia that hasn't given out licenses but is thinking about it and has seen a fair amount of evolution, or India. What have some of the sort of core use cases you've seen that have really helped, pivot the ecosystem forward, particularly when it comes to digital banks and digital banking?
Tanya, how you want me to go?
Sure. I'd love for any of you who have comments on this, but Supnendu, please feel free to go first.
So I think we have, let's take the example of Philippines you just mentioned. We saw two kind of model: an incumbent bank creating a new subsidiary, and that subsidiary has a new tech stack, new set of team, new board member, new CEO, and they just created that entity to build a complete brand new model. for their banking services. The other model we saw in Philippines, right, in fact, there are three models. There's a rural banks. There's one rural bank called Kantalian Bank, who decided that I just junk what I have. I'll rebuild from scratch a new tech stack. And we also saw the third model, which they recently announced, the digital bank license. And if you look at all these three models, their first focus, strangely, are not individuals. They're focusing on small businesses and medium-sized businesses because they believe, and if you look at the spreads today, the payment business is practically getting to zero margin because today moving money from point A to point B in domestic market is close to zero. You can't make money out of it. Lending market is highly competitive because with all the latest technology, they're all on stretch and all the macro issues around it. Really, they're trying to solve now a real issue, not taking money out of inefficiency of payment services or not lending to the segment, is fixing a real issue, that is fixing the small business and mid-sized businesses financial need end to end, starting from employee account, credit funding their trade finance, funding the invoices, giving them short-term lending, giving them micro insurance, all kind of range of product they're focusing on. I think that's where they think they're going to make money. But the foundation is around the core banking services, efficient lending, efficient risk management, I would say micro wealth services, basic wealth product, and micro insurance and micro pension strategy. And that's what they're focusing to build the base product line for individuals, but the real money is coming from small businesses. All the three models are focusing on that.
And you said you said interestingly all three models have focused on that. Does that would it be fair to say that you find it surprising that they haven't gone after consumers, or would you have liked to have seen them go after?
No, I think as governor said that because of some infrastructure already being put, let's say take Singapore example. Today, I can move money from my account to somebody's account at zero cost. What you will do with that model? And I mean, if you can't get zero is actual money, I don't pay anything anymore. The only time the banks make money when they send money, when we send money overseas. Now that also getting disrupted by the state. Today I have connected my national payment system to Thai payment system. This year I'm connecting to India, connecting to Malaysia. What is going to do to the market? The 15% spread today people have for overseas, including FX, is down to 3%, and that is going to, and with introduction of wholesale CBDC, is going to go less than $1. So you are constantly bringing down the cost of financial services to sub-dollar. You've got to think beyond that. That's why I like Omar's point. You've got to start embedding in different services, whether it's health services, agri services, or food services, and build financial services as embedded into the system. There's the real money, there's the real growth, and that's the real transformation.
No, that's thank you for that, Subnendu. Umar or Mamoon, any comments?
I think Supendra covered it. I think Supendra, particularly given his knowledge of, Philippines and Indonesia and some of the things that are happening. So I'll leave it to you to go to the next question.
Okay, great. So Umar, actually, this one I think is well suited to you. So the question is, how have digital banks around the world, especially non-commercial bank subsidiaries, raised deposits in order to do lending? Did they raise explicitly consumer deposits or raise operating deposits from SMEs, or a combo? So, perhaps just your experience in the past would be very valuable here.
Yeah. In the US, most of the deposit raising that has happened by digital banks, by neobanks, has been on the consumer side. And it's been a relatively blunt strategy of just offering a higher, more competitive rate. And the reason why neobanks and digital banks have been able to offer that is because they don't have any of the cost disadvantages that traditional and legacy banks have by virtue of their technology cost and by virtue of their branch footprint. So if you think about if you look at a public study here in the US and you think about Chase, which, is one of the, the largest banks here in the US, by virtue of their branch footprint, there's about 100 basis points of cost that's being added to every deposit that they are managing without offering the consumer any rate. And so if you happen to be a digital bank or a neobank that does not have that same infrastructure, does not have that legacy cost, you can just give that back to value in the form of, give that in the form of an interest rate and use that as a way to acquire customers and continue to then serve them with additional products over time. The other thing that I just say about deposit raising in the US, there've been some really great successful examples, both on the saving side and on the investing side, which is, the North Star should just be, what problem are you trying to solve for the customer, as opposed to let's offer them this particular product. It's just a different way of thinking. And the reason I say that is because, digital banks, neobanks, fintech innovators have raised lots of deposits by doing what's called roundups in the US. Every time you spend $3.64 on a cup of coffee, if you happen to turn on that feature in the app, it'll take, the 36 cents and round it up to $4 and put it into, a savings account or an investing account. And before you know it, you've saved 20, 30, 40, 50, $100 for a rainy day to be able to afford an emergency. So again, I think it's just a really awesome small nugget use case of actually solving a real problem, meeting the customer where they are. I know I'm sounding a little bit like a broken record, but meeting them where they are, really solving the need, making it really easy, as opposed to, come save with us, which has traditionally been how savings accounts and deposit accounts have been marketed and advertised.
Tanya, I really struggle that question which asked, can a deposit taking bank, digital bank, be profitable? With the prudential regulation rightfully expected from this deposit taking institution, the pressures are tremendous on digital bank. In fact, all the success we have seen is balance sheet funding, which means investors' money, or it is you are doing crowdsourcing, and those have went in funding the lending part and pay now, buy now, pay later stuff. But anybody using deposit money with all the prudential obligation, and at a cost of money, then doing the digital bank services has been a model challenge. So that's the reason I believe that they have to think beyond lending and payment to make a real impact.
No, thank you. And I'm just looking at time, and there is a long list of questions that I would have loved to continue going on with, but we're nearing the end of the panel, and I'd like to use the opportunity to thank all three of you, Swapnendu, Umar, and Mamoon, for taking out time in the morning and the night, and just with the candidness with which you've answered the questions, and also just sharing your experiences. We're about to embark on an incredibly interesting many years in the Pakistan landscape, and I'm sure we'll be coming back to all of you often with for a lot more help and advice and guidance. But so with that, I'll pass back on to Tahir.
Yeah, thank you very much. Indeed a very great discussion and very insightful. Thank you all the panelists. Thank you, Ms. Tanya, and thank you audience for such a wonderful set of questions. Before we conclude the session, I would request Honorable Governor once again for his closing remarks on this session. Over to you, sir.
Well, thank you, Zahir. At the end, I want to thank all the attendees of today's event and all those who will watch it subsequently on our Facebook page and other social media presence. I especially want to thank all the panelists and really our moderator, Tanya, who did an excellent job to keep the discussion going. I hope in future discussions around the world, a few years from now, there will be the CEOs of Pakistani digital banks who will be sharing their experience about their successes in Pakistan. I found the conversation very enriching. And at the end, I want to reiterate something that I said in my remarks at the beginning, which is that when we take a step back and look at our banking system in Pakistan, it's a system that has done very well at preserving stability. Where we need to do more is to bring our banking system to the underbanked and the unbanked. As a regulator, we are committed to the goal of harnessing technology to achieve this objective. To this effect, we have been rolling out a series of initiatives that I mentioned in my remarks, such as faster payments rails, a digital onboarding framework, remote biometric of customers, the digital banking framework that we are discussing today, the conversation on open banking, the initiative for common KYC, and many others. As a regulator, we are not done yet. Digital banks, and our topic of conversation today, is one step along this journey, and there are many more exciting developments to come. Please join us in this journey, and as we move forward, the State Bank of Pakistan will be not just a regulator, but also an enabler along this journey. Thank you very much for joining us today.
Thank you.
Thank you.
Thank you.
Thank you very much. Thank you very much all. God bless you.
Thank you.